What's up, everybody? Welcome back. Jerome, how you feeling, brother? It's good to have you here.
Good, thank you. Feeling
Dude,
good.
I was inspired by your recent video about backtesting. And like I said to you before we started the recording, that's kind of why I wanted to get you on the call today, to be able to pull some more value from you and what you've not only learned through your backtesting, but really I want to know what motivated you to do such extensive backtesting, where you
Yeah.
learned how to do that. And then hopefully people will watch our video today, enjoy it. And then what I'm going to do is put the link to your video in the description of this video so they can go watch that as well. So for everybody, you want to make sure you check out Jerome's channel, check out his most recent videos as well. But let me ask you first, Jerome, just to kind of get us started. What was it that inspired you to get into backtesting? Because most Forex traders come to the desk and they just want to click the button, trade, see the money coming in on their phone. My phone is an ATM, you know what I'm saying? Pips pay my bills kind of thing. And it's not actually what happens, right? So what motivated you and where did you get the idea to start backtesting?
I think the idea comes from taking it seriously and having a long-term approach in trading. And I was one to never really kind of gamble my money. So I never wanted to enter the market blindly. I did it in the beginning of my stages, did enter trades, but very small risk, like risking $10, $5. Sure. But as I kind of got surrounded by a lot of, professional traders, people that take this seriously and, doing it for the long term, I found out that backtesting, having confidence in knowing the statistics of how your system performs over the long term and how it goes through different market cycles, was definitely a way for me to come into trading with a very clear mind and remove emotions from my trade and just become more confident in my overall trading. So having that statistical data in front of you, knowing how the trades play out and how the parameters in that trades affect the outcome, so you can easily kind of select what trades and what parameters will increase the outcome and kind of shift the parameters so you can get like a high probability trade setup. So
interesting. So that comes from the data that you get from the testing is what you're saying.
Exactly. Yeah.
When you got into backtesting, can you when people ask you what is backtesting, how do you define it for people?
Just keeping it simple, going back in historic data and having a rules-based system and then applying that to historic data over time.
Were there specific pairs that you were looking at?
Mainly just I started with the major pairs and then I'm shifting into all the cross pairs.
Got it.
So mainly just a lot of the GBP.
Which makes sense.
Yeah, exactly.
Higher volume.
Yeah. Exactly.
Yeah.
So, yeah.
With the backtesting that you've done so far, are you keeping that all in the spreadsheet on Excel? How, I know a lot of people, if you Google it, I know I did when I first started, it was like trading backtesting spreadsheet. If you Google that, all these crazy spreadsheet results come up. Do you have a special spreadsheet that you use to track all this?
Yeah. So I created my own spreadsheet in Google Sheets, and I can basically input all the parameters and then entry data, entry type, like the time, date, exit data, price, all that type of stuff. And then I can filter out all the parameters as well.
What's the number one thing, out of all the data that you've looked at so far with the ASFX systems, what's the number one thing that stands out to you the most as a unique data point? Was it the time of day? How many entries? What pair? What stands out the most through your testing so far?
If we're going with the parameters, I think with that TDI, if it's swapping or if it's flat or rising or falling, depending on which way of the direction of the trade. So that is a very powerful metric to keep in mind when looking at trades. So, and also coming through that, the EMAs, obviously trading counter trend or with trending, massive difference on how to trade the outcome. But with our system, when you're trading with our entries, you're more times than less, you're hitting 1R, 1.5R, like 90% of the time. So obviously it's good to know that metric and how that kind of performs, because then you can kind of adjust risk and how your trade management around it.
But what do you say to people that when you because what you just said sounds crazy to some people. They're like, you're hitting 1R, 1.5R, 90% of the time. People don't believe me when I explain to them how accurate these signals are. I know how you justify it. It's with this testing, but do you have anything else that you've told people that I could try to use when people ask me, how do you justify that type of a win rate? Where do you think it comes from? What has your testing told you that it comes from? I know you said the TDI is the most important thing. The EMAs are important. Is that where the edge comes from that makes it such a
I believe so. So basically the parameters we need in order to get our signal, when everything aligns and we get that entry signal, we just get that push. And I think because we're having such a tight stop in our entries, we can see that price kind of go in our direction, in our favor,
Yeah.
really quickly. So,
You know,
but,
no, go ahead.
go
Sorry.
on.
No, go. I didn't mean
So
to cut
more
you off.
times than not, like once you get a low probability setup, so let's say you have 2 or 3 different knocks, like let's say you have a swapping L50 going counter trend and you're in the Asia range, the signal still presents. You're still going to get that pop, but you're more or less going to get stopped out.
Right.
Or break even, depending how you manage your trade. If you put
That's what I was going to say.
You stop to break even, exactly.
Right.
So,
So no, you're good. I think there was a little lag for a second. I love these Zoom calls, but I was thinking about, as you were saying that, is I was doing a call with Lindsay a couple of days ago, and she said to me that she didn't really know how to read risk reward before she came to ASFX. So how important has the fact that you are reading? I mean, where does risk reward come into play when it comes to your back testing? I guess is a good question.
I think it comes into like levels. So I think we were discussing this earlier. Like with the A1 system, for example, we know where we put our stop. And because we are using EMAs as our kind of significant level and our zone, when we are putting our stop either below an EMA or just below it, we know that it should hold that level. So being able to calculate that risk, and if it obviously goes below that level of price reverses, you don't want to be in that trade. So having that risk and knowing where price may come to, based on our other parameters, such as like the Asia session high,
EDR.
Exactly.
Yep.
So being able to have all these parameters where you can kind of justify and build a risk profile just by putting all these parameters in place and just analyzing very basic price data and the indicators we use has given me a much more better perspective on how risk works. And when price reverses, you just want to leave it and maybe look for a different entry or just look for a different pair.
Do you think that backtesting has made you better at trading, has made you a better trader?
100%. So obviously when I backtest, I still do my markups, but I just enter all the statistical data in a spreadsheet. Now, for me, I never used to do markups in my old, like when I used to do backtesting.
Really? That's crazy you say that, because I feel like the group that you came from when you joined ASFX, they preach backtesting.
They do, but statistical. So going through the market, entering it, entry, exit price, take profit, and other parameters that you're looking for. What entry signal was it? Like a 3-bar reversal, pin bar.
Got it.
All that stuff. So never did they do like markups and then save it out. I know one person in the group was doing that, but I just never really caught on to that. So when I came into ASFX and I saw you guys were doing markups,
where are they all taking pictures of these charts for?
Yeah.
Why are they saving all these? Why are you taking up all the data on your hard drive with these charts?
I feel like doing markup, like I get a lot of questions from that backtesting video I got. Like, what's the difference between entering all this data into a spreadsheet and doing markups? And I believe doing the markups on your own is a massive, massive advantage. Like having that visual, it's 100%. Like backtesting. Like doing markups is backtesting. You have the visual representation of how the trades play out.
Well, I can't code. Like I don't do any coding.
I've tried, but
our systems are all built on backtesting by hand. Yeah, hundreds of markups to prove that the system works.
Yeah.
So what I want to I'm trying to get to a certain point here. What of the backtesting, which aspects of it, and forcing yourself to do the markups to get you to the point of having the data, what through that process do you think you've learned most about yourself and who you are as a trader? Is there anything that stands out as like a quality in yourself that now you're super aware of it and it's helped you make better decisions because you're aware of it?
Definitely. Selectivity and patience would be the biggest ones.
Really?
So coming back from when I first started developing my own trading system, it didn't really have those kind of emotional parameters in there of patience, selectivity. You just had an entry and exit signal. And if price hit your targets, great. If hit your stop loss, it doesn't matter. But when I started incorporating that into a live market or even demo trading that and forward testing it, it just didn't sit with my personality. If I saw price coming against me, and because my stop was 30 pips, you kind of knew price was reversing. Just doing simple technical analysis, you knew price may come down and hit your stop loss. So coming to ASFX, testing these systems, it's kind of, and with our trade management, we know when price may come down and hit our stop loss. So we can adjust how we look at that trade, cut our losses, keep them small, and come back and look for another entry or another high probability setup. So with me going through these testing, doing the back testing and finding out how the parameters shift in our favor has made me more selective. So if I see a trade setup, I can keep it as an idea. I don't have to put money on every setup, as you say.
Huge,
like it's
bro.
just,
That's huge.
yeah. So it's just definitely helped me figure out my personality towards trading, how I approach trading, and just be more selective and not have to trade every single day, because I'm just waiting for all these kind of parameters to line up, or these high probability parameters anyway. So yeah.
I think there's two things I could add to what you're saying. One would be that backtesting in that sense, like, has helped make me confident too, because on those days where you don't find a great trade or those probabilities don't line up in your favor, you know, through the testing that you're still going to find another trade. It just might not be today or tomorrow or even the next day. 100%. It could be 3 trades in one day though, following that dry spell, you know?
Yeah,
so that's the first thing I think that backtesting has helped show me too. It always keeps me sharp, but also the backtesting, I think, has hurt me in some situations. Only one really main one, where in backtesting, if you do a lot of chart markups like I do, like I like to think that I do a lot.
Yeah. With
that, you'll see candles, 15-minute bars and even 1-minute bars. You'll see so many of them. And in hindsight, it can seem like it's fast, but in reality, that trade took 3 hours to develop. You know what I'm saying? So it's like, yes, you need to do the back testing, but actually pay attention to the time that these trades are taking too. You know what I mean? That was a big thing for me.
Yeah, exactly. And I think that just comes down to how I've developed more patience, because obviously when you're going bar replay on TradingView,
right,
you're just smacking through hours and hours of data in just a few seconds. So
you can get
when
like
you come into live market
to the actual impact of those candles. You forget how long they take to close.
Yeah. I mean, in 15 minutes when you're staring at it is quite a long time. Like, it
oh
just
my God, especially when you're in the trade, if you're just staring at it. Yeah.
Yeah,
bro.
exactly.
Yeah.
Exactly. So 100%. So just having that, even like entering the time of when these trades play out, you can just kind of filter out when they're in play. So
do you find that certain pairs work better at different times of day?
Yeah, definitely. So I know.
Can you give me context to that?
Yep. So testing GBP USD opposed to Euro USD. Euro USD will have a lot more setups later in the day.
New York session.
And GBP, and then GBP USD will, I don't know the difference, but it's more just after the Asia session.
Right.
And
it's the London Open.
Then you get like a lot of setups popping. So it's very interesting just to have that analytical data in front of you, just so you can kind of shift
your trading hours.
Yeah, exactly.
Have you changed your routine because of your backtesting?
I have. So I've just started trading later. So I used to get at my desk at 5 p.m.
And that, dude, wasn't that something that I was telling you about way back on one of our early coaching calls?
Yep. Yeah, at the beginning, yeah. So from 5 p.m. I shifted to like 7. So I'm just like more relaxed. I'm not checking my like charts so early. Because I used to trade for about 5-6 hours a day. And now I'm only doing about 3.5 hours.
Really?
So, and I'm still catching these setups.
Still finding trades.
Exactly.
Yeah, exactly. Yeah. I remember when I was doing a lot of testing, I go through weird spells. I'll do a lot of testing for no reason, and I'll just have it for myself. Yeah. Then I'll do testing like I'm doing right now to build for this trading event that we're doing in Florida. I build markups specifically for the event for a PowerPoint, right? And then there's time frames where I just don't do any markups at all. But there was one time frame where I was doing a lot about like I was basically trying to figure out if I was waking up too early, because I was trying to figure out were there opportunities between 4 a.m. New York time and 6 a.m. New York time, or was it really happening 7, 8, 9 o'clock New York time?
Yeah.
The answer was that I only was able to really remove trading CHF pairs, Swiss franc pairs, before 5 or 6 a.m. That was really all I was able to do. But with the back testing, I found 7, 8, 9 losers out of like, say, 150, 200 markups on CHF pairs that were early in the morning. They stood out. So right there, you can see in simple data, and I'm no mathematician, statistician, any of that. I'm just doing spreadsheet shit, basic markups. You know what I mean?
Yeah.
No, detailed markups, basic spreadsheet stuff. But like I was able to see right there, just by looking, like you said, at the time, the pair, right there, I could see what to cut out, and it makes me a better trader right there.
Yeah, exactly. And that's why I think like we have access to like the historic data. Like, and we can, these patterns they repeat. They're human psychology.
100%.
Like, they're repeatable patterns. And if you got the historic data, like I think you just go back and see how it's performing. Like, and especially because we're doing more day trading stuff on the 15-minute time frame, that type of data is limited on TradingView. I know you can pay for data on different providers, but I think what I'm doing is I've tested GBP USD from January 2019 to June 2019. I've got over 120 trades.
Right.
right? But I'm testing every outcome, like swapping L50s, counter trends, divergence in the Asia range. So everything like that, like all our parameters. If I filter out those high probability setups when it's not swapping, it's out of the Asia range, no divergence, I've got like about 15 trades. So yeah, exactly. So, and the win rate is like, goes from like 78% to like 85%.
Right. I was gonna say 90. Yeah. Yep.
You're making more money taking less trades.
Yes.
Because they're higher probability trade setups. They're not only going like 1.5R and coming back, stopping you out and break even.
Light bulb. You got the light bulb moment right there, right?
Yeah. So they're just shifting those parameters and seeing that on statistical data, seeing it with the markups, where you be selective, wait for those higher probability trade setups. You're going to catch a runner. You're going to get those, 3R, 4R moves where price just takes off. So yeah, do
you find that the back testing can make you overanalyze some of your trading in the moment though?
Yeah, definitely. So
how do you balance that out? I guess it's a good question too.
Definitely a good question. So what I've come across is definitely you get more analytical in your analysis. You start questioning it. You start having, really kind of analyzing what's going to happen because you've had this back tested data. The best way for me was just to focus on how the system performs. So the outcome of my trading, my back testing using the parameters I'm testing. So all I have to do is shift those parameters into my live trading, and whatever happened to the outcome, you don't worry about it. So you
detach the emotion to it.
Exactly. So you just follow the process you've been doing in historic data. Like you go through bar by bar, you find the entry signal, you put all those parameters into play, and you take the trade. It's exactly what you do. You shift to the live market. So initially I was very kind of analytical. I was like kind of analyzing it a bit too much, but just follow exactly how you kind of doing the back testing and just pull the trigger when the trade presents.
I mean, at the end of the day, this is a business. So you have to you're coming here to risk. So at some point you have to get comfortable with actually clicking the button and taking the risk. All the back testing should do, in my opinion, is make you confident to click the button when it presents.
100%.
That's it. You have to go into it with the intent. Intention is important. You know what I'm saying? In everything that we do. You can't just do markups to be like, oh, bro, I took 15 pictures of 15 trades today. I'm marking it up. No, you have to go in and actually follow your checklist, work through the idea, and get winners and losers. I find, and I'm sure you could agree with this, a lot of people overlook losers and don't count them in their back testing. So how are you doing anything to make sure that you don't do that you don't overlook any losers?
I earlier call this morning where you go over markups, and in hindsight, it's very easy in historic data going back to pick the trades you want to see win.
Of course.
It's very easy to tell yourself if not, you'd be in that trade.
Oh, I wouldn't have done that. Of course I wouldn't have done that.
Exactly. So that's why having a rules-based system and just executing it in historic data and your back testing is the best way to get proper results. So you're not really skewing up the results of all that data. So even if the trade is a loser, like you still got to take it.
You still got to mark it up, still got to put it in the file.
I'm even taking trades I wouldn't even be, and that's why I'm testing all these parameters.
Should be. To get the whole breadth of the whole thing. I definitely, that's how I built the system.
Bar by bar, skip like a few hours, see how it performed, then go back and be like, I hit my stop loss. I wouldn't have been in that anyway.
Right. You can't do that.
You can't do that.
We're laughing about it, but it's true that a lot of people will lack that accountability with themselves in this business as they try to go about it. So I think it's important that everybody listening remembers what we're saying here. Like you have to really hold yourself accountable. So two more questions for you, Jerome. First one, for people that are new to backtesting, what do you recommend as the first step to start doing it? Because a lot of people have been overwhelmed by it. They look for videos on my channel. I have one, I'll link it below, about how I do my markups and stuff like that. But this one will be in that same realm. But what do you tell people that are new to it and haven't done it? How do you get them started?
Basically, build out, even do it on paper.
Okay.
So write on a piece of paper your entry date, entry time, the pair you're trading, the signal that's presenting. So if you're in ASFX, A1, D1 or D2, and then write down your entry time, entry price, stop loss, and you take profit. And then
just simple journaling like that. Simple.
It's very simple. No,
almost the same stuff we have in the trading journal.
Exactly like that. And then just just go through historic data and just write down when the trade presented, you write down the date, the time, your stop loss, your entry price. And then
it almost should not be a matter of if you would have taken it or not. Does it fit the system or not?
Did it present? Yeah.
Yes. Does it present? And this has to have rules, and you have to really have to have a checklist to work through to get to that point. But yeah,
Exactly.
so you tell people to just keep it simple. I love that.
Keep it simple.
I
I
love that.
go more detailed in my trading, but that's just me personally.
But dude,
but
you didn't start that way. You didn't start that way. Day one, you didn't do that. You know what I'm saying?
No.
Day one, my markup sucked, but you get better. And now I could do 10 of them very quickly now. You know what I'm saying? So I think you're 100% right, but it's always about taking that first step. Yeah. What were you saying?
And coming back onto like, if you just never done back testing before, the markups since joining ASFX, like the markups are a massive, massive advantage in back testing as well, because you have how price reacted, how price moved. You have kind of that its own characteristics on that pair and how it moves. So that's just having that in the back of your head, and also being able to click onto that screenshot of how the trade played out. Massive. For
the people who say, I totally agree with you. For the people who say, I don't need to do back testing, I just practice when I'm live in the market, what do you say to that?
I think if let's say, for example, you've just found a system online that hasn't been back tested. Like, let's say on YouTube, you see all these strategies. Let's say you hit that strategy like in real time. Let's say you open up your charts, you open your USD, the setup present, and you take it, and it's a winner, right?
Yeah.
You've never done back testing before. What happens if you take the next 5 trades and they're all losers?
Right.
You don't have that confidence or data to know that, hey, maybe this system had 5
maybe this system
trades
sucks
in a row,
right?
Or maybe it sucks, exactly. But you're not going to have the confidence to go take that 6th trade that would have just made back maybe all 5 losses. You know what I mean? So without that data and without kind of back testing and, you know, kind of having, like with ASFX, like I had enough trust in you to kind of just go straight into demo, like learn the system and just see how it performs. Exactly.
But you went then back and started doing the testing.
And then I went back and started testing it
to build your confidence
because
and make you independent.
Exactly, because ASFX systems are, you know, proven and tested.
They're testable. Anybody can do it. Anybody can go back and test what we teach in the courses. 100%.
And it's a very easy signal to present in the market, and very easy to test as well, because we're using EMAs. So there's not crazy like zones or anything. You're not jumping on the high time frame, the 4 hour to find out structure zones and then come back to the 15-minute and start. Like, it's the signal presents in the 15-minute, and then doing all the 1 hour, 4 hour and higher time frame analysis just complement our trades. So 100%, having no back testing data or not proving a system.
It's crazy to then think you would put real money into that. Right.
Exactly.
Crazy. Yeah. Crazy. So no, this has been good information, bro. So like I said, everybody, I'm going to link Jerome's video about how he's built his back testing spreadsheets and his whole process of back testing. I'm going to link that down below, but hopefully today's video was a nice little introduction to not only why we think you should be back testing, but how to go about it, how to get started, and really why it's important to do it. So if you have any questions, any comments, drop them down below. You can reach out to Jerome on Instagram, on Discord. Where else are you? You're on YouTube, you're on Twitter, you're all over the place now.
Yeah,
dude. You're taking it over.
Instagram,
just broke 1,000 followers on Instagram. Whoop, whoop.
Yeah.
That's exciting, right? Yeah, bro. It's amazing. It's great. So everybody, I'll make sure you can connect with Jerome in the description wherever you're watching or listening to this. But we hope that this video brought you guys some value. If it did, just make sure you're subscribed. Give us a big thumbs up so we know you enjoyed it and we can spread the value to the rest of the trading community. But Jerome, thank you, brother. You know I appreciate it. Everybody else appreciates it. We'll see you, everybody, in the next video. Thanks, guys.
Austin.